Hi, Tony here. US equity markets finished lower on Friday as a renewed sell off in chip makers, triggered by a breakthrough from a Chinese AI startup, and ongoing geopolitical tensions in the Middle East weighed on sentiment. This came on top of already frayed nerves in the tech space following the sharp unwind in the Korean stock market following the highs which it struck back in mid June. Now, whether the pressure on tech stocks continues this week will likely depend to a large degree on quarter two earnings results from Tesla and also Alphabet. Away from earnings season, there will be a nervous eye kept on the Middle East, where last week's rapid escalation resulted in a 14.5% gain in WTI. Let's take a look at how the charts of the NASDAQ and the Dow Jones are shaping at the start of this new week. What we can see here is that after striking a high back in early June, the NASDAQ has been spending the past 5 or 6 weeks in a corrective pattern. And that corrective pattern took a leg lower on Friday, breaking below this band of support here, coming in around 28,800-ish, bringing us down to where we see as a critical band of support, coming in around 28,000. So this is a wave equality target to start with, and it is also the trend channel support you can see coming through when you put this high and this low and project it forward. So what we're looking for here is signs of basing into this week around this area here. It doesn't matter if it goes a little bit below there. What's going to be really, really important is whether we can see the NASDAQ test and hold on a closing basis. Because if that occurs, we're starting to see evidence of basing. And I think that would be an initial indication that this correction, which you can see in this yellow channel here, is nearing the end and that we can start to see a resumption of the uptrend. Now, we've been talking about the catalyst for this being quarter two earnings season, particularly for the tech stocks. That starts this week. And of course, we've got more of the big tech stocks reporting next week. So it's going to be very interesting to see how this plays out and whether we can hold above this trend channel support before a push higher. Now, if for whatever reason we were to see a sustained break below here, i.e. a couple of daily closes below here, then to me, you're probably looking for a deeper decline, initially back towards 27,000, where you would then potentially look for a deeper decline towards 26,336, which is the 200-day moving average. So for me, all eyes this week on this support band in this area here. Very similar for the Dow Jones, of course. What you can see here is a very strong run up from the March lows. And then after striking this high on the 7th of July, 53,294, we spent the past week and a half consolidating. I don't think that has finished yet. I do see the potential for the Dow Jones to come through and test this support band here, this yellow area here. But providing it holds above here, and it's probably around 51,600 to 51,300 for those that are looking, providing it hold on a closing basis, then the expectation is this has been a correction and that the uptrend will eventually resume towards 54,000. Of course, if we were to see a sustained break below this support band, then I think we'll probably see a deeper decline back towards this 50,000 level here, which we tested on the 10th and 11th of June. That's all for now. Thank you for listening and stay tuned for more market updates this week.